Hi there, welcome to Kneppyinvests. There are a few things I want to discuss, a few topics I want to discuss, and I thought instead of doing one or two standalone videos, I'll just bundle them all together in this one video. I've never done this before, I don't think, and I just didn't want to do ASX stock of the day by going through the best performing and worst performing companies on the ASX. However, I will actually do that. In fact, that will be the first thing I do in this video. So the agenda today is I'll start off with looking at the best and worst performing companies on the ASX. Still seeing a lot of volatility, which is natural enough because companies are still releasing the half-year full reports. We are in the second last day of February. Tomorrow, don't forget, tomorrow is because this is a leap year. We do have the 29th of February, and then I'll briefly look at a company whose share price rose 400% today. In fact, a little bit over 400% today. And even though it rose over 400% today, the market cap of this company is still about $12 million. I'll touch upon Pointerra. The company's in a trading halt right now. In fact, I think their shares has been suspended. So I just wanted to look at that suspension announcement because it is quite interesting. Another thing I want to discuss, a topic, is all regards to not overreacting. And this is quite important, particularly if you can get a little bit emotional, particularly if you are watching the market every single second. And I think the company that will really highlight about not overreacting is a company called Doug Technology. In fact, I'll show you an article released by Motley Fool just after the markets had opened, and they are looking a little bit foolish now by actually releasing that article quite quickly. So we'll look at Doug Technology and focusing on this don't overreact part of investing, a very important part of investing, and it goes along with being patient. I think being patient is quite important, and not overreacting is important as well. And we'll also look at a lot of these companies whose share price rebounded after really bad days yesterday. And I actually did take take the opportunity to take a couple of trades on the expectations that some of these companies' share price would bounce, and some of these companies' share price did bounce a fair bit. So let's start off with looking at what happened on the markets today. It's really interesting because I haven't had a look at this, but the market, if you look at the ASX 200 or the XJO flat, the All Ordinaries flat, down a little bit, but then the Small Ordinaries up 0.63%, and the All Tech, which is the XTX, up 1.7%. So in fact, today was a great day if you were heavily invested in technology companies or small caps, because you significantly beat the market. And on market index, they have all the sectors and all the indices. And so information technology up 2.88%, energy up 0.84%, staples down at 0.8%, and telecommunications down 0.55%. And you'll notice the worst performing indice today was the ASX 200 banks, down at 0.56%, while the XTX up 1.72%. So a really good day for technology companies, and probably a reason why my portfolio was up a fair bit. And I was wondering, why is my portfolio up a fair bit today? In fact, it was up about 1.5%, and that was a good thing. That's always a good thing when you compare it to the overall market, like the XJO or the XAO. And here is the reason. Yeah, technology had a good day, small caps had a good day, but not all companies had a good day. So let's have a look at the best performing companies and the worst performing companies. We'll start with the worst performing companies today. Now, this is based off percentage change. So a few companies here I have never heard of before, like Next Metals Exploration, down 40.9%. However, the market cap of that company is $4.6 million. So in the 10 worst performing companies today, the highest market cap is 19 million. So the way I like to do this is I rank these by market cap. There is a company here, fourth down the list, actually third and fourth, Way2VAT and Ordinera have been in the news lately, but I won't touch upon those companies. Pretty sure Way2VAT has just done a capital raising, and that's understandable because if we have a look at their chart, the share price and the volume of this company rocketed up a week ago, and the management have taken opportunity of this and done a capital raising. That's exactly what they should do when they see the share price rise like this on pretty big volume. It was massive volume. I'm pretty sure I talked about this company in my previous technical update video. And the other company here, whoops, that's later in the video. Other company here was Audiera. They had a really good day yesterday, up about 100%, down 20%, which is understandable. You see this a lot. When a company share price rises 100% in one day, the next day you usually see the share price drop a fair bit. And we're going to see that more than likely tomorrow with the best performing company. So what I usually do when I look at this list of companies in the best and worst performing companies is I rank these by market cap. So the worst performing company in terms of highest market cap, not the worst performing company overall, was Nyrada Pharmaceuticals. Now, interestingly enough, I did see they did release an announcement in regards to how Debut is selling. And this is from Acadia, their partner in the United States, and everything's going as planned. I'm not sure why the share price is down 10.6%. There was a shorting attack against this company, and it seems like the shorters were completely wrong because they thought their sales were going to be significantly lower than expected, and sales were to expectations. In fact, they were the top of the expectation range. So I'm not sure why the share price fell 10.6%. I'll probably have to have a closer look at the announcement. I did not have a close look at the announcement at all. Zimplats, I'm pretty sure this company released their results, 10.5%. Kelsian definitely released their results, down 12.9%. Healy Group, another company, released their results, down 9.4%. Australian Clinical Labs, down at 6.9%. And I had a quick look at their results, and on the surface, they look pretty bad. Hutchison Telecommunication released their results a few days ago. Close the Loop and Narrow released their results today, down 7.6%. Close the Loop released their results a few days ago, so I'm not sure what's happening there. MyState also quite a few days ago, down 6.9%. Possibly some of these companies have gone ex-dividend as well. And sometimes you'll see if they do have a high dividend, the share price could fall a fair bit. Motorcycle Holdings down 10.2%. Bubs released their results yesterday or today, down 8%. Now we're getting to companies with market cap below 70 million. So let's have a look at the best performing companies today. Top gainers by percentage change. And without doubt, the first one you notice here is Nyrada. Up. No, I don't want to log in. Up 421%. Even though the share price has risen 421%, the markup is still $15 million. I thought it was $12 million. $15 million. And even though it's risen 421%, in the last year, the share price is still down at 17.5%. This company is not profitable. I'm pretty sure they don't even have any revenue. Share price is at 9.9 cents. 10 cents is a really natural resistance level for any company. It's also a support level for any company whose share price is dropping. And the reason why 10 cents is a really strong resistance level is twofold. First reason is because its share prices start going up at a different rate. So below 10 cents, share prices rise or fall by 0.1 cent. When they get above 10 cents, share prices rise or fall by 0.5 cents. So there seems to be a lot of resistance moving forward for a company when the share price gets to 10 cents. And I'm pretty sure Nyrada got to 11 cents. And it's not shocking to see share price fall below 9.9 cents. I have used this very fact that 10 cents is a very strong resistance level to trade in the past. Other best performing companies, Intellicare, 5E Advanced Materials, I don't know anything about that company, Horizon Minerals, Donaco International. I know what that company does. They own some casinos in Vietnam or somewhere like that. This was a market darling back in 2013 or 14. Share price got to almost $1, maybe got above $1 at one point in time, but some problems with the Vietnam casino, particularly when it comes to COVID-19, has seen the share price of that company fall a fair bit. Not a lot of companies that I remember releasing results here. So I see one at the bottom, Drone Shield. Oh, okay, Drone Shield up 23.2%. I know I had a very quick look at their results, and to me, it was just two expectations. Profit like $9 million. So the market liked it. And I'm very happy that I bought back into Drone Shield. So I took profits. I was training it, took profits. Once I did research, but I analyzed Drone Shield a little bit more. And I went, well, I shouldn't be trading this company right now. Instead, I should buy some shares in this company and put into my small cap portfolio. And right now, I'm thinking I made that decision. And that's very important. The ability to buy back into companies that you've recently sold out of. I don't have that problem, but apparently a lot of investors do. And I don't understand why anyone has that mentality. Well, I just sold out, so I can't buy back in. And I bought Drone Shield at higher prices than when I sold. So don't be afraid to buy back in if you come to a realization that maybe it was a mistake. So let's have a look. Verbeck, VBC, did release results up 20.7%. Probably have to have a look at their results. Small cap company, 30.3 million. Let's have a look at the best performing companies by market cap. Okay, next DC released their results after trading finished yesterday, 13.1%. Company's not profitable. A lot of, I won't say hype in that company. The chart looks absolutely amazing, but the company is still burning through a lot of cash. 8.83 billion. It does seem a lot of fund managers, professional investors, that sort of thing. They love data centers, and NextDC is a data center king in Australia. Liontown Resources up 9.96%. APM Human Services, another takeover bid for that company, or the previous takeover bid was raised to about $2. So a bit of a I wouldn't say arbitrage there, but a bit of a distance between where the share price is now and where that takeover bid at $2. So 40 cents possible. That's a nice little 25% gain. So I'm not sure why the market did increase the share price of that company to $1.60. Now, talking about don't overreact, Zip up 13.13% after falling a fair bit yesterday. BrainChip up 18.8% after falling over 30% yesterday. Drone Shield, I've already talked about them. Electro-Optic Systems, I am trading this company, also own this company in my small cap portfolio, up 17.5%. I had a glance at their results as well, and I went, oh, my fear when it came to Electro-Optic Systems results was that the market was going to act negatively just because profit was, well, they weren't profitable, they were loss making. So thankfully the market was able to overlook or look past the very fact this company is not profitable. And the reason I say that is because I have noticed that a few investors simply focus only on profit. Oh, this company is horrible, they loss making, or this company is great profit making, that sort of thing. I saw that with DGL. Went to actually Hot Copper, and one of the first comments was, this company is profit fell by 50%. Oh, it's a horrible, horrible result. Talking about DGL, up 14.8% to 70 cents. So I was a little bit opportunistic yesterday, and I bought some shares in DGL Group. Instead of selling my shares, I bought some more because when I had a look at this company, I thought the market was overreacting. And at that point in time, have a look at that video. At that point in time, I saw the net tangible assets were about 70 cents. And I thought, I wouldn't be surprised to see the share price pop up just because of value investors. Company I've traded in the past, MedAdvisor, up 13.8%. So I should have a look at that company. And other companies here, a few uranium companies. So maybe uranium, maybe one uranium company. Looks like lithium had a nice little bounce. Appen up 20%. They had a good day yesterday. Demerix 11.9%. Probably should take profits with that company. I am trading that at the moment. Should just take profits. Oh yeah, I did notice a lot of lithium and uranium companies in that list. So I think there's a little bit of excitement or building lithium at this point in time. Okay, first thing I want to talk about, well, the second topic I want to talk about, or maybe first topic, is Nyrada. Here is Nyrada. Let's zoom in a little bit. Just looking at the title of this announcement that caused excitement in the market today, significant neuroprotection in Nyrada preclinical brain injury. Now, this is not any sort of financial deal. I get excited about financial deals. I don't really get that excited about these sort of announcements because the story has still a long way to play. And the reason I say that is even though this announcement does read really good when it comes to brain injury, the very important point here is the last point in the highlights section. Phase 1 clinical trial scheduled the second half of the 2024 calendar year. So still phase 1. So a long way to play out for Nyrada, but the market has not liked this company. And you can just see that with the share price. Not the share price, the chart of Nyrada over the past few months, weeks, years. So the share price of this company has been a long-term downtrend. I'll get rid of this. This would have been from a previous video. So I actually have looked at this company in the past. And one of the reasons I had a closer look at this company is because that West Australian mining bloke who was on the small cap portfolio, that small cap podcast. I forget what it was called. Haven't heard from him for a while, and he was spruiking Nyrada. So he would have been spruiking Nyrada back in 2021, 2022. Share price of this company went to a high of 46 cents in 2021, fell all the way down to 2 cents. And this could be close to my definition of breakout. The only thing missing, so we would have significant volume, massive volume coming in, and the share price is at least a 6-month high. The only thing missing is financial report or release of a positive financial report from the company. We don't have that. This is not a positive financial report. It's just a positive announcement. And because the company is only in phase 1, there's many years to go for Nyrada, and this company will have the ups and the downs, but exciting times for the company, and more than likely exciting times for some shareholders, because this is an opportunity for them to now get out, or if they want to stay in this company a little bit more, maybe now they can buy back into the faith of this company, whatever. Maybe they have a lot of faith in this company, a lot of faith in the management, and this sort of justifies their faith, maybe. But a good day for Nyrada. This was after a really bad day. 26th of June, share price of this company fell 55.7%. So it just shows you that sometimes good announcements can come shortly after bad announcements and vice versa. So that's all I want to talk about Nyrada. I don't usually get caught up in these sort of announcements, but the market cap of this company is still just 15 million. Before they released this announcement, the market cap was 2.96 million, because in TradingView, they don't update the market cap after this sort of rally. They update the market cap at the end of every session. In Market Index, they continually update the market cap. So the market cap in Market Index is the real market cap, or close to the real market cap. Okay. The next topic I want to talk about is Pointerra. What I want to talk about Pointerra for. So if you look at the summary in ComSec, there are no buyers and no sellers, no records found. And the reason behind that is suspension from quotation. So 2 days ago, this company went out of training halt at 1:32 p.m. or 1:35 p.m. In fact, pause in trading at 1:22 p.m. So you notice there's always a pause in trading and then followed by a trading halt when there is trading happening. You don't see this before about 9:45. But once 9:45 comes, there is a pause in trading to know that there is trading halt coming up for the company. But before 9:45, there is no pause in trading, because trading is not happening. And trading cannot be paused because it's not happening. The reason I say 9:45 is because about 9:50, and when a company does go into a trading halt during trading, shares in that company are halted. The trading is halted for about 15 minutes. Maybe it's 10 minutes, 10 to 15 minutes. And so if a company puts out a trading halt or announcement that needs a trading halt at, say, 9:55, shares in that company won't start trading when they should be trading. That's why usually you start seeing pauses in trading being released at about 9:45 or 9:50. So the reason behind the trading halt was, so if I am a shareholder of a company like Pointerra that is burning through cash, I won't say I get nervous when I see a trading halt, but I just think most likely reason for a trading halt is a capital raising. And I don't like capital raisings usually, but was this true for Pointerra? No, it wasn't. Okay, in accordance with listing rule 17.1, Pointerra advises that they want the shares in this company halted in regards to a pending an announcement regarding a material contract award. So that's exciting, or possibly exciting news. Now, just because it says material contract award doesn't mean I will get excited when I read the actual announcement, because sometimes some of these material contract award announcements are just full of fluff. Anyway, so why are the shares being suspended? So a lot of times when a company's shares are suspended, it usually is directed from the company itself, saying we don't have enough time, because when a company's shares are halted, they have a few days for the trading halt to be lifted. And if they don't have enough time to release the relevant information, they can request the ASX to put their shares in a suspension. So you'll notice in the trading halt announcement, it says here, anticipates the trading halt will remain in place until the earlier of the commencement of normal trading on Wednesday, 28th of February, 2024, which is today when I'm recording this video, and when the announcement regarding the material contract award is made to the market. Some investors don't realize this, only because even though it says Wednesday, 28th of February 2024, it doesn't mean the announcement will be released on the morning of that day. Pointerra could have released the announcement a few hours after they went into a trading hold. So you have to be aware this can happen. You see it all the time. And some investors are confused by that. They think company shares have to remain in a halted state for 2 days up until Wednesday, 28th of February. So obviously Pointerra didn't have the announcement ready to be read. Well, I'm saying that. Maybe that's not true, because no announcement was given on the morning of, or the commencement of normal trading on Wednesday, 28th of February. And usually if the company is not ready to release the announcement, they can request the shares be suspended from trading. But did that happen with Pointerra? And this is where it becomes interesting and why I want to talk about it. It's just the wording here from the ASX. So nothing from the company itself. This is straight from the ASX. Okay, so the most relevant here is the second paragraph. On 27th of February 2024, ASX, was the right day? Okay, on the I think it was the 26th. I don't know. On the 27th of February 2024, ASX required okay, this is just a light bulb has just lit up in my head. So they released the trading. I have no idea this happened. So Pointerra went into trading halt on the 26th of February 2024, and obviously they gave this material contract award to the ASX. Hence, this second paragraph. On the 27th of February 2024, ASX required Pointerra to provide specified information for release to the market in relation to the material contract award referenced in the trading halt request of the 26th of February. Pointerra has failed to comply with that requirement. I only saw that last bit of that paragraph. Pointerra has failed to comply with that requirement. I thought ASX was talking about the original announcement on the 26th. So it seems like what's happened here is Pointerra have given ASX the announcement. ASX have not liked what they've seen, and they wanted some clarification in regards to this material contract award, and Pointerra have failed to comply with that particular requirement. So this is not a good look for management of Pointerra, but this could be a good announcement. We have to hold our horses. Maybe ASX just wanted a few things cleared up. And ASX a little bit harsh on these smaller cap companies when it comes to this, because ASX don't want these small cap companies to be hyping up or ramping up their company. And this goes back to, I forget what company it was, about 4 or 5 years ago, because this company released an announcement and it was really ramping up something. And I'm pretty sure that really pissed off ASX. And this is why they've come down on hard on Pointerra here. They came hard down on AVA Risk Group a few weeks ago, thinking they were ramping up a particular announcement. So interesting times for Pointerra. Next thing I want to talk about is overreacting. And we see this overreaction from individual investors, even the market this time of year when companies release their half-year and full-year results. So I'm going to talk about a company called Duck Technology. And I know what happened with this company because I am trading this company right now. And even though I do go away for most of trading day and do my own stuff, I just want to see how the market reacted to this company. So you notice here that Duck Technology was down 4.3%. Share price closed at $2.44. So you might think, oh, okay, that's not a good reaction from the market. Down 4.3%. But here is an article released by Motley Fool this morning. Guess which ASX tech stock crashed 29% on its half-year results? They're talking about Duck Technology. The Duck Technology share price is having a day to forget on Wednesday, down to $1.80. Yes, the share price of Duck Technology fell to $1.80 within the first few minutes of trading, which means, and share price closed at $2.55, which means the share price of this company was down almost 30% on open. So let's have a look at the Duck share price or the chart today, and you'll see a massive overreaction from the market within the first few minutes. I just wish I just wish I was paying more attention to this company. I was paying attention to another company, and I took advantage of that share price drop. But let's have a look at the Doug Technology share price today, or the chart. This is, we'll have a look at the 1 minute chart. Even the daily chart looks really intriguing. Okay, so in that first minute, so it opened up down 24.6%, and the share price fell all the way to $1.80 in the second minute, and then all the selling just stopped. No more selling after that. In fact, buying came in. Buying came in, no selling, and that's why share price went from $1.80 all the way up to $2.44. We are talking about 33% rise from the bottom. That's why I was just sort of a wish I could go into my time machine and take advantage of this overreaction from the market. And I'm seeing this a lot this February. I'm seeing the market completely overreact. We also saw this with email payment today, but on the reverse side. So email payments actually rose on open and then fell, and then rose again during the rest of the day. Come on. Yeah, this is intriguing trading with email payments. In fact, we saw 3 sort of swings in the share price, or 2 swings. Yeah, 3 swings. So email payments opened up higher. In fact, the share price went from about 84 cents yesterday all the way up to 95 cents within the first few minutes. Then the share price went from 95 cents all the way down to 79 cents, in fact, 78 cents by 9:28. Within 30 minutes, the share price went from 95 cents to 78 cents. And then for some reason, the share price just trickled higher. Is that a right way to use it? Just grinded its way higher from 78 cents or 79 cents to close at 90.5 cents, up 7.7%. So just like Doug Technologies, if you sold out at $1.80, you're kicking yourself right now. Just like email payments, if you sort of overreacted, either way, say you double overreacted. I just thought of this right now. Just say you're a day trader. You bought in email payments because you saw the share price, the market reacted really well to the results. You bought in at 94 cents. And you went, oh, God, this is great. And then within about 10 to 15 minutes, share price dropped from 94 cents all the way back to 80 cents. And you went, oh, this is horrible. What a terrible trade. I will sell my shares. So you bought 94, sold at 80 cents, and the share price rebounded back to 90 cents. You'd be kicking yourself today. But day traders love volatility. So don't be surprised to see a lot of day traders trading these companies right now. Another one, this happened yesterday, Zip. So I talked about Zip in my previous video. Zip saw a lot of volatility, and that volatility continued in today. So I have to go back 2 days. This is again 1 minute chart. So share price of this company opened up higher, went to 99 cents, and then fell all the way down to 80 cents. But we didn't see the rebound in share price like we saw with email payments. The rebound's happening right now. Happened today. Share price has rallied from 80 cents back up to 90.5 cents. I did have a sell on Zip. So look at the because I am trading this company as well. I did have a sell with Zip just below 80 cents. And the reason why is simply because 80 cents is a really good support level for this company. And not surprising, Zip share price has bounced off 80 cents. Any other company you want to talk about? Oh, Money Me was another interesting one. This is one I did take advantage of just a dump on market within the first few minutes, in the first 10 minutes. Maybe it was a little bit longer than that. So Money Me is probably not as liquidly traded. Share price, you can't really see it in the chart because it's not as liquidly traded as some of these other companies. So 5 minute chart, you can't really see it. You can sort of see it here. Share price actually closed yesterday at 86 cents. It rose to 87 cents on open, and there will seem to be a dump on market over a 5 to 15 minute period. Share price went from 87 cents down to 70 cents. I actually did see this. I saw this drop in share price to 70 cents. I think it was at 68 cents. Or 6.8 cents, sorry. And then I added to my position, trading position at 7 cents. So I recently bought it at 8 cents. And typically if the share price falls 10 cents, I want to sell that position. But here, I thought the market was overreacting. So I bought some more shares at 7 cents. My whole bid was not taken out. So what was it? 70% of my bid was taken out. And I still have the rest of my bid in at 7 cents. And I don't think it's going to get there, probably. Share price rebounded to 8 cents. So not surprising there. And the other one was DGL. So yesterday, I just thought DGL, I've already mentioned DGL. So yesterday, we've seen a really good bounce. I was thinking there will be a really good bounce today because the share price was just going sideways at 60 cents. And that's actually a good sign. When the share price consolidates like it does with DGL Group, and I'm only looking at a really short time frame, and typically when I talk about consolidation periods, I'm talking about long periods of time. So a perfect example of that is step one. Shares in that company consolidated for an 18-month period, but here we're talking about shorter time frames, and the very fact there's very little selling at 60 cents and the share price just went sideways made me think more than likely there's going to be a bounce. Now, I could have been wrong, and the way the share price could have gone down, could have gone is down, but I did get that bounce today. Share price up 14.8%. So possibly I'll just take profits with that particular trade because the share price has moved to where I thought it might get to, 70 cents. Possible further to go for this company. So I thought this was an overreaction. Another company I bought today, and I thought it was an overreaction, was AccuSensus. They didn't lose a contract. They just were not successful in contract. And the share price plunged, what was it, 33% yesterday? And today, after about an hour of trading, I just wanted to see how much further the share price had fallen or risen. And the share price went down to 73 cents. So I have taken an initial position in AccuSensus, thinking maybe the market is overreacting here and wouldn't be surprising to see a bounce. Now, maybe the reason why the share price of this company broke out and went on a run is because the market was expecting this company to win that material contract or just that contract in Western Europe, and they didn't win it. That's the only reason why I can understand, envisage why the share price and market has reacted the way it's done. And the share price is actually, another reason I took a position is the share price is at a really nice little support level at around about 72, 73 cents, the old lows we saw back in October. Anyway, I think that's all I'm going to talk about in today's video. Let's just have another laugh at the Motley Fool being a little bit foolish, releasing this particular announcement. It's out of date. In fact, it was out of date within about 30 minutes after the article was released. And any shareholders who are doing this were probably laughing by the end of the day. The reason I saw this announcement was just because it came up in my phone. Here's an article you might want to read. I was like, guess which ASX tech stock crashed 29%? And I was just thinking, this is going to be about Doug. Yep, Doug, it was. Anyway, that's all I got for this video. If you like this sort of format, maybe I can do more of these videos moving forward. If you don't, yeah, just leave in the comment section and maybe I won't do these videos anymore. Anyway, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for today's video. Have a good day. Bye.